let's move on to the next topic. I saw this piece of news. CBS reported zombie foreclosures remain a small fraction of the U.S. housing inventory in Q1 of 2025. So I thought this was interesting because, first of all, it's a little bit of good news that foreclosures remain a small fraction. And if you dig a little bit deeper into the data, overall in the U.S., we're not seeing too many foreclosures. Actually, it's trending down year to year, which is great news, which means people are a little bit better situation financially than they were a year ago in terms of maintaining payments on their homes. However, I want to share this bit of information because what is a zombie foreclosure? I've never heard of this term before I got into this business.
It's new to me. It's like, what do you mean by zombie foreclosure? Like,
So yeah, I looked it up, as you do when you don't know something. Zombie foreclosure, like, okay, so imagine you're a homeowner and you haven't been making payments, right? Your lender sends you a letter, hey, you've defaulted on your mortgage, and you panic. You say, honey, grab the kids, grab the stuff. We're getting into the car. We're ditching the house. We're moving somewhere else to like an RV park or something. They just up and leave,
oh wow.
assuming that the bank will just take back the ownership of the house and they'll sell it and you're just gone, right? I don't know why people would do this, because apparently maybe they don't understand how equitable and legal ownership work. But when you do a mortgage, right, Jason, you know this.
Yeah.
There's something called equitable and legal ownership. When the lender takes back the home in a foreclosure, they would take back the equitable ownership and they would have the right to sell the house on the open market. Sometimes lenders don't actually exercise that right. So you, as the guy who ditched your home, still have equitable ownership or equitable title, and you're responsible for all the expenses and all the property taxes that come with that, right?
Insurance.
So yes, everything's still
Everything.
tied to your name, your social security number, when you sign that trust deed. So if you just leave your house and you don't take care of the paperwork, and you don't look back, you may have a bunch of property taxes being piled up and unpaid, which is really bad.
Exactly.
Really
And they'll
bad.
put judgments against you, garnish your wages.
Yeah.
This is one disclaimer here that we have to put up is every state has different foreclosure laws. So generally speaking, yes, you got to be very careful, in my opinion. But you have to apply and like research your state laws and different localities. But overall, though, this news definitely surprising.
Yeah. It just seems like from, being a I don't own my home, but I've helped manage properties. And coming from like a landlord's perspective, if you sign a contract with somebody, that person just abandons the place, and like there's a lot of steps you need to take before you can legally evict a tenant, even if they're not there, right? It's a huge ordeal. It's a huge headache. So, don't do that. Don't just abandon your the property and abandon. You're gonna get sued. Yeah.
Yeah, it's a very difficult spot for anybody. Tenant, landlord, homeowner, lender. Banks traditionally don't want your house. That's not the business they're in. They're really in it to lend you the money and wanting to see you retain ownership of your home and pay it back. So
they want the interest. They want your interest payments.
they just want that money back they borrowed from that they let you borrow to buy the house. So
yeah, and the banks are incentivized to lend out the money, right? That's why there's fractional banking reserve and stuff like that, so that they can continue to pour money into the small businesses and into real estate, so that community can grow.
absolutely. Zombie foreclosures.
The fact that this thing exists and there's a name tied to it is really interesting.